Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 15th of June. All right, now as we come out of the North American session, starting the Asian day, the main news is the Fed have come and gone, and they are signaling more rate hikes, right? Now, the market's sort of factoring in another 0.5%. So that's two rate hikes of 0.25 over the next couple of months before December, right? I find that hard to believe. Now, if you read through some of the text here, they're sort of talking about how inflation's not coming back quick enough. But I'll tell you what, after topping her up around 9% back to 4%, and that seemed to be working pretty well. This is, I've been doing this for a long time, like 35 years. Some of this stuff that you see from the central banks is to sort of like basically not scare the market, but, give them the heads up. If they keep spending, we're going to raise interest rates, right? That to me seems to be where they are. Although them actually sort of saying we're going to raise by, say, 0.5 is a little bit, it's a little bit different, because they're like, not only scaring you, but they're saying this is what we're going to do. Okay. Which, they're very transparent. They're not here to play games. And if I have a look at the markets, right? Now let's just have a look at the various markets here. They have reacted quite significantly to the news, right? You're sort of getting a pullback here in the equity markets. If I just sort of blow those up a bit, you might be able to see a little bit better what's actually going on. It just doesn't make sense to me that they're going to be raising interest rates with everything else going on. A lot of the prices are coming down. A lot of the economic industry numbers, they're just sort of saying the prices aren't. That could be, fuel or whatever it is. But situation is we are seeing the initial threat of a rate hike impact the equity markets, which you would expect, down. Okay. So, and the dollar index has sort of spiked back up. But overall, this is creating a lot of discombobulation. I mean, the cryptos have got hit here. Tell you what is the sleeping giant for me is gold, right? For all those gold traders sitting there wondering what's going on, well, me too, because I think it's all been said and done. Gold is just stuck up here at the moment and not really moving. Discombobulated price action there on euro. We are starting to see oil start to move back down to the downside. Now, if I have a look at the currencies, see how they performed after the Fed announcement. Okay, the price action. This is what I'm sort of want you to focus on. This is not easy, right? And you can see a big clean out. The Aussie has been trending up nicely. Now, we are seeing that's just the stop loss run to the downside based on liquidity gaps, right? If you have a look across all the instruments, looks like the market didn't know how to react, or just reacted very adversely to the Fed press conference and announcements, right? The shock was we're going to raise by 0.5. You see a bit of US dollar strength immediately. And then it comes back, right? That's what I'm talking about. This is the section where the move didn't really match what was going on. Okay, so you get the initial spike down here, and this is not me reading anything into it, just that what I've seen over many, many years. Yeah, that's the initial reaction, right? That's the scare tactics, and we're back to where we sort of were, right? That's what I can see. Now, time will tell over the next few days if the market believes the Fed or not. What we need to see is some more US numbers. That's the bottom line. But what it does, it recharges a lot of these trading opportunities. So don't be discouraged from what the Fed has done, right? They sort of signaled, look, if things continue to increase, like some sort of prices, they really want to see next month's CPI number, then we will either raise rates or not. Right, they're not in a cutting situation just at the moment, but there are opportunities. This is like a flush out. These moves here, say on euro, sterling, Aussie, Kiwi, and even dollar CAD for that matter. Well, actually across most of the pairs. This is just a flush out of stale positions, right? People hanging on to positions or looking to sort of gain some advantage from the press conference or the statement, and they have been cleaned up. It's a nasty little move, which basically realigns the market. So when we come to redo your analysis, you're adjusting your levels here according to what is actually been going on, right? We've got a new resistance line there on the dollar index. You're going to have new support lines here on euro, sterling, Aussie, Kiwi. Now, these give us fresh opportunities. So don't think it's all over bar the shouting, because we are going to be revitalized with lots of opportunities. And then you come back and go, okay, so that's in the market. The Fed's come out and said something, a little bit left of center. How does that leave the rest of the market? So you just come back to the core basics, right? Your technical analysis, and then come back into the calendar and have a look. Okay, so we've got that out of the way. We've got the US CPI numbers. I was sort of saying a couple of days ago, our worst potential outcome is the US CPI number coming out as expected, which is, I know it was 0.1 less, but it doesn't really give the market anything to work with. So there's some positions have been flushed out. The Fed's now come over the top and said, yeah, well, if it doesn't keep going down, we're going to raise rates, right? That sort of skews the market a little bit. If anything, we're dealing off a level playing ground now. And now this is where things start. If you're looking at the calendar, we've got the Aussie employment figures today, right? Now, each of these countries, like Euro, or the Eurozone, I should say, the UK, Aussie, Kiwi, Canada, they are all becoming very active with their policies and their data. So to me, the Aussie and Kiwi will be in play today, not just with the Aussie data, but also the Chinese numbers here as well. And they could well have a big influence on the outcome of what happens here. So with the Aussie little flush out, I think we're positioned to go, well, this trend is still up, but it really depends on the unemployment rate and the employment change, right? These are the numbers, or that's the previous numbers. There's the numbers we're looking for. That should set the tone, and then keep an eye on the Chinese numbers. Okay, you ideally want the Aussie numbers, say they're strong. You want the Chinese numbers strong, and then you get a more consistent move. If one's up and one's down, well, the outcome there, it's probably going to be pretty muted, if anything. And then you come back down, start to have a look through the rest of the numbers that are coming out. We've got some, the ECB interest rate decision is going to be the key one, right? So they've factored in a 0.25% hike. Once again, it's going to come down to the statement and the press conference. Now, as you can see from the FOMC meeting, the price action after that is disjointed, right? So just be very careful. Even if they raise rates, right, that is factored into the market. So if they don't, euro falls. That's what you need to understand. As far as anything else, it's going to depend on the press conference and the statement. So just be careful with that. And then we start to roll into some US numbers, right? Retail sales figures, Philly Fed Manufacturing Index. These numbers are good historical numbers. So make sure you keep an eye on that. That may give us the tone for the dollar straight away. Right at the moment, the dollar has been sort of flushed out. Positions have been repositioned, and now we're sort of sitting back waiting for that to happen. So you've got the when you come down to it, this is a really good sequence of data releases. The ECB at 10 or 10:15. That's my time. So then you've got retail sales. I just blow that up a little bit. You'll see, because then you got the press conference afterwards. It's a pretty busy sort of schedule. Okay, ECB. US retail sales. Don't forget the Fed Philly Index and the Empire State Manufacturing Index. And then you've got the ECB press conference down here and US industrial production numbers. So lots to play for. Euro is going to be very lively, obviously, with the US and Eurozone numbers coming out. So make sure you, it's very hard to wait sometimes for all the data to drop, as in, like, you can take out all the risk and just wait for everything to come out, but you can be ready to move with what's happening. I would be just going into my charts here and really sort of fine-tuning where the levels are. Now, if you're looking at Euro, just on a technical perspective, we had the down move. Now we're sort of seeing dollar weakness. Okay, so the Euro is coming back. The 0.25% is factored in. This is where it gets a little bit tricky up here, right? Because you've got, there's no sort of real technical levels here. If anything, you're looking at the big round numbers. For those Fibbo lovers, this is where you could actually potentially put in some Fibonacci retracements, even looking from that move from where it started coming down. You can see where it's topped out here. They may provide some sort of levels for you to basically manage positions, but Euro looks a bit tricky against the dollar, and that's going to be the most lively pair because we do have obviously the US and the Eurozone numbers. So maybe check the Euro crosses. that may be a better situation to go off. On the day, Aussie, definitely with the Aussie employment numbers and the Chinese numbers, Kiwi with the Chinese numbers, and then you've got, you're coming into the Eurozone, you've got, the ECB, and then a whole range of US numbers. There's a few Canadian numbers there as well, right? So what I'm highlighting is the numbers or the instruments where there is data coming out. And don't forget those equity markets too. They'll be working off those US numbers as they drop as well. All right, guys, that's it from me. It's a little bit of a sticky situation, but now that the Fed's said what they've had to say, the market will start moving around with these US numbers as early as today. We see weaker retail sales and manufacturing numbers. They will start to factor out one of these potential rate hikes. Okay, that's how it works. And if the numbers are strong, well, I'll tell you what, the dollar will slowly start to climb a bit further. So there's plenty to watch across all time zones here today. And good luck. Just remember, around the ECB press conference, liquidity can sort of dry up a bit. It can get very loose and a little bit nasty. So make sure you are trading with absolute control. All right, guys, have a good one. All the best. Cheerio.